The stock market has been nothing short of crazy in 2020, and now the stock market is breaking record highs. So if you're wondering what's going on in the stock market and if this is the time to sell, make sure you watch this video until the end. What's up, everybody? I am Jaspreet Singh from theminoritymindset.com and welcome to The Minority Mindset. Between February and August of 2020, we saw the stock market break record highs, then break record lows, and then break record highs again. On February 19th, 2020, the S&P 500 closed at an all-time high. Then right after that, the pandemic hit and the stock market crashed, and just about a month after the all-time high, the S&P 500 closed 34% off of its highs. This was the fastest bear market in history, and nobody knew what was coming next. Well, come August 18th, less than 5 months after the bottom, the S&P 500 hit a brand new all-time high. We went from seeing headlines like "we are in the fastest sell-off in history" in March to hearing that the S&P 500 saw its best growth in the history of time just a few months later. A bear market is when the stock market is going down, and you enter a bear market once the stock market falls 20% off of its highs. A bull market, on the other hand, is when the stock market is going up. In March of 2020, our stock market went from boom to bear market in the fastest time we've ever seen happen in history. And then in August of 2020, our stock market went from crash to boom, again, in the fastest time we've ever seen happen in history. Back in March and April, we talked about how the stock market had a few options as to how it could play out. And one of the options was a yo-yo type of recovery where the stock market would crash very fast and then it would recover very fast. And right now, it looks like we're seeing that yo-yo recovery. But what's coming next in the stock market is still a big question mark. So if you're wondering what's going on in the stock market and if this is the time to sell, you are in the right place. So make sure you watch this video until the end because you don't want to miss any of these key details. But before we get into that, hit that thumbs up button below, because if you don't, well, the way the YouTube algorithm works, YouTube will be much less likely to show you any of our other financial education videos. The S&P 500 is an index that tells us how good or bad the stock market is doing. You can think of the S&P 500 kind of like an elite group of stocks, because the S&P 500 is a group of stocks and it's comprised of the 500 biggest stocks on the stock market. So these are your companies like Amazon and McDonald's and Facebook and JP Morgan Chase Bank. When a company becomes one of the 500 most valuable companies in the stock market, it will kick out one of the companies in the S&P 500 index and take its spot. When a lot of stocks in the S&P 500 are up, people say that the index is up, and that means the stock market is up. When a lot of stocks in the S&P 500 come down, that means the index is down, and that's what people mean when they say that the stock market is down. I'm not going to spend too much time talking about what makes a stock go up and down in this video, so if you haven't subscribed to our YouTube channel yet, make sure you do that, but I'll give you a very brief summary. The price of a stock depends on how much somebody else is willing to pay for it. Like if you own a share of a stock and you want to sell it for $100 a share, but nobody wants to buy it for $100 a share, and the most somebody's willing to pay for it is $80 a share, then your stock is only worth $80. The amount of money that someone's going to be willing to pay for a stock depends on how much money the underlying company is making. The more money a company makes, the more its stock is worth. In general, when this pandemic started, businesses were completely shut down, which means businesses weren't making any money, so the stock market crashed. It was a scary time. Nobody knew what was happening in the economy in the country, so now nobody was willing to pay money for stocks, and so stock prices were going down because nobody wanted to buy stocks. That's when millions of Americans lost their jobs literally overnight, and so even if you were one of the special businesses that was open, you weren't making any money because nobody had money to spend, because so many Americans just lost their jobs, and so this caused the stock market to crash even more. That's when the government said, okay, we're gonna artificially keep the economy moving by pumping a whole bunch of free money into it. So the government created the unemployment program. That way, even if you did lose your job, you were still getting paid. They sent out stimulus checks and they gave businesses free money. Now the economy was on life support, but it was moving. To put it in perspective in a timeline, on March 23rd, 2020, the stock market hit its bottom. And then on March 25th, just 2 days later, the CARES Act, which was a stimulus plan, was signed by the Senate. And 2 days after that, on March 27th, the stimulus plan, the CARES Act, was signed into law. You'll see why these dates matter in just a minute. As soon as the free money was printed, the economy started moving and businesses started making money again. Now that businesses were making money again, investors came back and they started buying stocks again, and then the stock market recovery was expedited by none other than the Federal Reserve Bank. The Federal Reserve Bank, or the Fed, is known as the central banking system of the United States, and they control our money supply. As a little bit of background information, in normal times, the Fed can only print money, that way they can lend this money to banks, because when banks are making a lot of loans, they don't want to run out of cash, so they are able to borrow money from the Fed. That's how it typically works. But sometimes, during extreme situations, the Fed is allowed to print money and do other things with it, like inflate the stock market. When the stock market went into free fall in March, the Federal Reserve Bank enacted their special powers, and then on March 23rd, the Federal Reserve Bank made an announcement where they promised that they would provide an unlimited amount of quantitative easing to keep markets functioning, which means that they promised that they would print whatever amounts of money is necessary to boost the stock market. And coincidentally, March 23rd, the day that the Federal Reserve Bank made this announcement, was the same day that the stock market hit its bottom. So the stock market stopped crashing the exact same day that the Federal Reserve Bank came out and promised that they would print an unlimited amount of money to pump up the stock market, and it was the exact same week that the United States government promised to hand out free money to businesses and people. This, my Minority Mindset family, is called stock market manipulation. Now, economic manipulation isn't really a new concept. We've seen bailouts happen in the past, but this was the first time that we've seen the Fed go out and actually buy assets like corporate bonds on the public markets. This is where the majority of people start complaining about what's going on in the system. And this is where I want you to not think like the majority of people, because I want you to use the system to your advantage. That way you can come out of this a financial winner. Look, if you want me to be blunt, you cannot beat the Fed at their own game, okay? If they're gonna pump trillions of dollars into the stock market, you might as well be one of the people that's getting rich because of it. So now what do? Is this the time to buy more stocks, or is this the time to sell? Because on one hand, we have the stock market that's getting unlimited support from the Fed and it just keeps going up, and on the other hand, we have an economy that isn't really recovered and we have millions of Americans still unemployed. Well, before we get into that, let me just make sure this is clear. Investing has risks, okay? You are never guaranteed to make money when you invest. You might even lose money. So always do your own due diligence and never blindly listen to a random guy on YouTube. If you do want to invest in stocks, it's very easy now because there's tons of digital brokerages out there like our sponsor Webull, which lets you buy and sell stocks and ETFs right off of your phone. Webull is super simple to use. All you have to do is create a free account, fund it, and then you can buy or sell whatever stocks or ETFs you want off of your phone or your laptop, and you don't have to pay a penny in commissions because Webull is a commission-free brokerage. And the best part of all is that Webull is giving you, Minority Mindset fans, 2 free stocks just for investing with them using our link in the description below. You get your first free stock just for creating a free account, and you get your second free stock valued at up to $1,400 when you deposit $100 in your account. So if you want to learn more, start investing, and see how you can get your free stocks, I got the link to where you can do that in the description below. Fair warning, I don't know how long this promotion will last, so take advantage of it while you can. And Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to open an account, and they don't charge you a penny to make a trade. So if you want to learn more and get your free stocks, I got the link to where you can do that in the description below. We've all heard the saying, buy low and sell high. And now that the stock market is breaking new highs, are we set up for another stock market crash? Maybe, but it's not so straightforward, and we don't know how long it will be before that bubble bursts. Remember, a stock is worth what someone else is willing to pay for it, and the underlying value of a stock depends on how much money the company makes. Towards the end of June, the stock market was way up, but investors had more cash than ever sitting on the sidelines, which means there's a lot of buyers that are waiting to invest. Plus, you have a lot of traditional savers now moving their savings to the stock market because they're seeing the value of their savings drop, because as more money is printed, the value of our dollars goes down, and that is happening very quickly in 2020. So you have a lot of savers trying to save the value of their wealth by moving their money from their bank account to the stock market. These three things together, investors waiting to invest their money sitting on the sidelines, and the Federal Reserve Bank support, and savers putting their money into the stock market, tell us that there's a lot of room for growth in the stock market still. But it's not guaranteed because our economy is still on choppy waters and this virus has not gone away. Plus, we have a lot of insiders and executives selling their own shares because either they think it's going to get worse or maybe they think this is a good time for them to just cash out. What you do with your money right now should depend on what your financial goals are. I have some friends who are traders that are making a killing in this market because markets like this is what you dream of. I'm not a trader, so I can't really talk much about that, but if your goal is to be a long-term investor, you should not be worried about day-to-day swings and you should not be perfectly trying to time the market because that's impossible. If you believe in the future of the United States and the economy and our stock market, then you should just be buying stocks like normal, and if the stock market crashes, that's when you come in, you double down, and you buy even more aggressively. It's impossible to predict what's going to happen tomorrow in the stock market, and what we've seen happen time and time again is the people that sit there and wait for the perfect time to buy the stock market at the bottom of the peak. Those are the people that miss all the opportunity because they just sit there waiting on the sideline all the time. If you are a newer investor, instead of trying to perfectly time the market, try buying in phases. Pick 3 to 7 stocks or ETFs that you like. And now, instead of trying to find the perfect time to buy each one of these stocks or ETFs, buy them in phases. So every week or every month, just buy a little bit more of each one of these stocks or ETFs because now you're not trying to perfectly time the stock, you are dollar cost averaging. You are just going to continuously keep buying every week or every month. That way, over time, you are going to consistently keep building your wealth by accumulating more shares of these stocks. It's a little bit different than the drip stock method that I talked about when the stock market was crashing, but this is a strategy that will help you build wealth over the long term. It also helps to stay up to date on what's happening in the top finance and business news, and I know that's not very easy to do, especially with the amount of news that's happening every single day, but that's why we created the free Minority Mindset newsletter where our team first breaks down the top finance and business news and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about why the dollar is crashing and what's happening to the value of the dollar, I already made a video on this and you can watch this video on YouTube by clicking this button right over here. Thank you for watching and as always, keep hustling!